Hey, what's up everybody? Back here with another video. Today we're going to go over on trading breakouts. Um, kind of like the other video that we talked about with identifying bottomings of patterns and such. But also going to go over a couple things. One thing before we get into trading breakouts, I do want to show you something. Kind of another example of the bottoming patterns and stuff. I'm seeing some stuff on some charts today, so this would be perfect time to show you guys. So, see here, you got a pattern of an ascending triangle. Most of the time, these are bearish. You have a 68% chance of it breaking to the downside. Now, with that being said, it doesn't always break to the downside, but there is a 68% chance that it does. So, obviously, you see Bitcoin broke here on the 1 hour. What you want to do to get your measured move, you measure the open end of the triangle, and that will be your measured move. So your measured move is going to be 43,789 right here. So that's a measured move for Bitcoin here. So we'll see if it holds. It should. It doesn't, it doesn't always, but it gives you a really good idea of right around where it wants to be. So that's really, really helpful when trying to identify a bottom. Alright guys, well, let's go ahead and get into trading breakouts. So, breakout trading is used by active investors to take a position within a trend's early stages. Generally speaking, this strategy can be the starting point for major price moves, expansions, and volatility, and when managed properly, can offer limited downside risk. Now, a breakout is a potential trading opportunity that occurs when an asset's price moves above a resistance level or moves below a support line on increasing volume. The first step in trading breakouts is to identify current price trend patterns along with support and resistance levels in order to plan possible entry and exit points. Once you've acted on a breakout strategy, know when to cut your losses and reassess the situation if the breakout sputters. Now, as with any technical trading strategy, don't let your emotions get the better part of you. Stick with your plan and know when to get in and when to get out. And those are very key points. Knowing when to get in, knowing when to get out, have a plan, exit strategy, and enter. Okay? Very, very important. Always want to know these things before you get into a trade. In my opinion, it's a must. Have to have a plan. Just like anything else in life, right? Anything that you're trying to do well, you want to make sure you have a plan kind of going forward, right? So what is a breakout? A breakout is a asset price moving outside of its defined support or resistance level with increased volume. A breakout trader enters a long position after the asset price breaks above resistance or enters a short position after this asset breaks below support. Once the asset trades beyond the price barrier, volatility tends to increase and prices usually trend in breakout direction. The reason breakouts are such an important trading strategy is because these setups are the starting point for future volatility increases, large price swings, and in many circumstances, major price trends. Now, breakouts occur in all types of market environments. Typically, the most explosive price movements are a result of a channel breakouts and pattern breakouts such as triangles, flags, and head and shoulders patterns. As volatility contracts during these time frames, it will typically expand after prices move beyond identified ranges. Now, if you look down here, they kind of give you an example. You got a pennant right here. Basically, the idea of buying the breakout is, boom, you want to buy above this line, okay? Now, like we were talking before, how you would know the measured move of your price target, measure the distance between from end to end of the triangle, okay? And that will give you your measured move. Now, typically on a breakout, you only get it roughly about 70-75%. Sometimes it'll go it'll make the full move, but most of the time, the safe way to trade is only count on 75% of that playing out. Now, regardless of the time frame, breakout trading is a great strategy. Whether you use intraday, daily, weekly charts, the concepts are universal. You can apply this strategy to day trading, swing trading, and any style of trading, which is great, right? Now, when trading breakouts, it's important to consider the underlying asset support and resistance levels, which is very, very key. Very, very key. The more times a asset price has touched these areas, and the more valid these levels are, and the more important they become. At the same time, the longer these support and resistance levels have been in play, the better outcome when the asset price finally breaks out. So right here, guys. Okay, so you have a pennant down here. Again, distance from end to end of the triangle, give you your measured move on the breakout to the downside. Okay. Now, if you look, it looks pretty close to right here. It tried to come up and it failed, and then it come back down. So, as prices consolidate, various price patterns will occur on the chart. Formations such as channels, triangles, flags are valuable vehicles when looking for stocks to trade. Now, aside from patterns, consistency, and length of time a asset price has adhered to, its support or resistance levels are important factors to consider when finding a good asset to trade. Now, I'm going to go over entry points here. After finding a good asset to trade, it is time to plan the trade. The easiest consideration is for the entry point. Entry points are fairly black and white when it comes to establishing positions on a breakout. Now, once prices are set to a close and above resistance level, an investor will establish a bullish position. Now, when prices are set to close below a support level, an investor will take on a bearish position. Now, to determine the difference between a breakout and a fake out, you wait for confirmation. And I cannot stress that enough, guys. You gotta wait for confirmation. You gotta I look at this as a business, okay? And that's the most important thing. You have to look at this just like a business. And if you do so, you'll be very successful. That's what I do. I write things down on a whiteboard. I write things down on paper. I treat it like a business, guys. I mean, it is what it is. The more you treat it like a business, the more profitable you will become. Now, it does take time. It's not going to happen overnight, but you gotta be determined. Now, by the end of the day, they wind up moving back and within prior trading range. If an investor acts too quickly without confirmation, there is no guarantee that the prices will continue into new territory. Many investors look for above average volume as a confirmation or wait toward the close of a trading period to determine whether prices will sustain the levels they have broken out of. And that's also very, very important, okay? So whenever you go down here, guys, let's just say this breaks to the upside, okay? You got this thing, it breaks to the upside. Obviously, you got your target and everything. You know, you want to plan your exit out of this whole thing. You have everything mapped out, okay? Say she breaks out, comes all the way up here. Now, you want to wait till the candle closes, because really, you could get a wick just like this, and the candle body closes all the way down here, and well, guess what? You bought up here, you bought the breakout, sure, but it wasn't confirmed because it never closed. So now you just lost some money, okay? So you want to make sure it gets closed above this range right here. Now, after it closes, it's really good if you can buy a retest. They don't always retest, but if it does, that is the safest way to buy a breakout, is buy the retest. And for all you new guys out there and new women and whatever, I do suggest buying retests. If you buy the retest of the breakouts, it's a lot safer. Just until you get a little bit better, you know, and then you have to form your own. You have to make it your own, right? I'm giving you the tools to be successful, teaching you the rules and things like that, and it's up to you to take all this stuff and make it your own. That's very important, because I've met a lot of people that trade, and nobody trades the exact same, okay? Everybody trades differently. There's no, like, oh, you got to do this. There's just some simple rules. If you follow those rules, you'll be successful. Everything outside of that is up to you. You make it your own, make it fun, however you see fit, right? So another idea is to calculate recent price swings and average them out to get a relative price target. Okay, that's another way too. If the asset has made an average price swing of 4 points over the past few price swings, this would be a reasonable objective. Now, these are a few ideas on how to set price targets on the trade objective. Now, this should be your goal for the trade. After the goal is reached, and you, as the investor, can exit the position, exit a portion of the position to let the rest run, or raise your stop loss order and lock in profits. And that, guys, right there is so important. If you think something's going to go more and it reaches your price target, just raise your stop loss and ride it out. Okay? It's as easy as that. That way, you're locking in your profits and you're not going to lose any money. Or any of your profits, right? Very, very important. And I'll make a video on setting stop losses and things like that. We'll go over more of that. But definitely key. Always set your stop losses. You got to treat your money, you got to treat this like a business, like I said. That's the most important thing. All right. Now, where to exit with a loss. This is also important. It is important to know when a trade has failed. Breakout trading offers this insight in a fairly clear manner. After a breakout, old resistance levels should act as new support, and old support levels should act as new resistance. Now, this is important consideration because it is an objective way to determine when a trade has failed. An easy way to determine where to set your stop loss order after a position has been taken, use the old support or resistance level as a line. in the sand to continue or to close out a losing trade. As an example, down below. Okay, so right here, you can see that right here at about 57 points was the last support. Okay, you want to set your stop loss there. All depending on what your risk tolerance is too. You could even, maybe come down here to like 56 maybe. But you don't want to lose too much, right? So there's so many assets out there that it's not worth getting hung up on one, right? But there's no point. Absolutely no point. Now, after a trade fails, it's important to exit the trade quickly. Never give a loss too much room. If you are not careful, losses will accumulate. And yes, they will. Trust me, they will. You're new. You're going to make mistakes. I still make mistakes. Everybody makes mistakes. It's impossible. It's not like you learn how to trade and now you win every single trade. You don't have to win every trade to be successful. If your winning rate is higher than your loss rate, you'll be successful. Simple as that, really. So but I'm giving you the tools and the knowledge to increase your win rate. So very, 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 very important. Now, when considering when to exit a position with loss, use the prior support and resistance level beyond which prices have broken. Placing a stop comfortably within these parameters is a safe way to protect a position without giving the trade too much downside risk. Setting a stop higher than this will likely trigger an exit prematurely because it is common for prices to retest price levels they've just broken out of. Very, very important, guys. Remember what I said? It's safer to buy the retest. Definitely safer. So, yeah. I definitely going to give you guys some examples as well. Just to kind of sum everything up. Identify your asset. Wait for the breakout. Set a reasonable targets. Allow for the asset to retest. Know when your trade has failed. Exit your trades toward market close. You can't discern at the open whether prices will hold at a particular level. This is why you might consider waiting till near the market close to exit a losing trade. If an asset has remained outside of a predetermined support or resistance level toward market close, it is time to close the position and move on to the next. Because let's face it, guys, there's many assets out there. And another thing, be patient. Sometimes you'll let your emotions get to you and you'll sell something a little too early and you'll lose money if you just waited like another 5 or 10 minutes, you wouldn't even have lost money. In fact, it was just retesting and you would have made money on that trade. So having patience is very key as well. And exit the trade at your target. If you do those things, you will have a high success rate. All right, guys, let's go over here, and I'm going to give you some examples. Prime example, okay? So, and I'm going to do some videos too where I bunch up all these indicators and show you how to use them all together and kind of go like through a checklist, right? Of a successful trade or looking for a successful trade. Okay, looking for nice entries and things like that, right? Okay, so you got this on the 4 hour. This is in, obviously it's in a down pattern right now, right? It's technically we would be trying to find a bottom. So what we do, we're in a channel, downward channel here. Now, channels typically end up breaking out to the upside. So right when this thing, what would be our measured move, up or down, right? That's the key. So this thing, go ahead, if it wants to break down, all depending on where it breaks, but let's just say it breaks the channel right here, right? Well, now you're looking at a target of 3669, 0.003669. So you'd be below the 200-day moving average on the 1 hour chart. Obviously, it's not the greatest, but that's where you'd be looking. So, what you want to do, you just want to keep looking, and you see how this is respecting the channel, right? Eventually, this is going to break out to the upside or to the downside. More than likely, I'd probably have to say it's going to break up to the upside, and your move from there probably be the support line right here, which is now resistance because it's no longer, it was support, but unfortunately now we are, it's pretty strong resistance too. So say you broke out right here. You broke out right here, boom. Your measured move is there. Okay? So it's heavy resistance. It's got a lot to break, so honestly, I would definitely sell it there. Because it's probably going to come down, roll over, consolidate a little bit, and try to make another stab at it. So that's just me personally. That's what I would do. But yeah, you want to buy these breakouts, guys. You want to buy the breakouts. It's very, very, very important. Looks like this particularly actually may end up breaking to the downside, or we could just get a wick. Now remember, you want to wait till a candle body close. It's very important. So if this thing were to come up here, boom, 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 and break out, you want to wait for that candle body close. Say it closes, boom, comes back, you get a retest here, and then it shoots back up. Perfect. That's perfect. Absolutely perfect. And, actually, I'm going to put that in another video about moving averages and such. Moving averages, all depending on which ones, they kind of act as magnets. So, but yeah, we'll save that for another video. I know this is probably a lot for you guys to digest, but I definitely want to show you. So let's go back in the price history here. We'll go on the 4 hour. Let's look for another pattern that had broken out. Been in some down for the past few months, so, but boom, right here, here's a channel right here, and then boom, look, it broke to the upside. This is a 4 hour chart, by the way, so it's all works the same. All works the same on every time frame. Basically, the lower your time frames, so like say, this is a little more advanced technique. I'm not going to really get too much into this, but basically the idea is you, on your lower time frames, that's how you can identify trend changes. Because then they end up rolling over to the higher time frames, like the 30-minute, 1 hour, 2 hour, 3 hour, 4 hour, 5 hour, 6 hour, 8 hour, 12 hour, etc., etc. That's how that works. So typically, sometimes you're able to, when you get a lot better at this and you learn more, you'll be able to do that, which that's a little more advanced technique, but that's okay. Doesn't matter. Um, but yeah, it's very, 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 very helpful though. Very helpful, very effective. But yeah, trading breakouts, guys. It's relatively easy. You guys just have to practice. Um, you know, this definitely isn't rocket science, but it does take some practice and it takes some determination, and you got to pay attention. If you do those things, you will be successful. Period. You'll be successful. All right, guys. Well, that's all I got for this video. I guess I'll catch you guys in the next one.